Hi everyone, welcome to a brand new episode of Market Watch. Guys, we did it, we did it, we did it. We reached 300 subscribers. Thank you so much for everything you do, and I hope you enjoyed this episode. And if you haven't subscribed yet, make sure to give me a thumbs up, comment, and subscribe. Guys, I am so grateful for everything you do. It's been a hard work. I cannot believe that we went from 0 to 300 subscribers. I'm so grateful. I'm so humble, and this fuels my interest to bring you guys more analysis, more videos, because I'm enjoying this, and we're going to build a community of people that wants to learn from each other and become a financial savvy. So thank you so much. I don't know how your week been. I hope you're having a good day. Man, this week have been intense, and then we saw a decline in the US indices. So the labor market data came out. September labor market data affirms that the Fed has a long way to go in order to bring inflation down to the target level, as the labor market is not easing as fast as the Fed wants, and the labor market is still strong and still resistance. So investors are now anticipating that the data have given the Fed the green light to remain hawkish. The unemployment rate fell to 3.5% from 3.7% in August, and as a result, the indices declined. And central banks are trying to increase the cost of borrowing to slow hiring, spending, and investing in order to bring down the inflation. So the participation rate eased slightly from 62.4% to 62.3%, and the labor participation could complicate it for the Fed, as the Fed needs more workers to competing for the jobs in order to help bring down the wage growth. And many companies are now preparing for recession. We recently saw that Peloton have gone out and said that they're going to plan to cut more than 500 jobs, and companies such as Meta and Snap are cutting jobs, while companies such as Amazon and Google have said that they are going to freeze or pull back on hiring. So a lot of things that is going on right now. And we saw right away when the labor market data came out that the indices declined. And we can see here, if we look at the indices, you can see right away NASDAQ, Composite, S&P 500, and Dow Jones Industrial all in red. And we can see here all the major sectors are also in red. And we can see here the labor market unemployment rate, it came in at 3.5% from a previous 3.7%. So we are seeing a strong labor market, and the Fed, when they see this, that gives them ammo to continue to increase interest rates. And we saw the stock markets decline because of that. And we saw that the labor force participation came down a bit, not by much. So there is still strong, still a lot of people out there working. And the non-farm payroll came in a bit lower this time, but so we might see that the labor market still, maybe the growth is slowing, but it's still strong. And the U.S. wages are still growing, and the job quits are still dropping. So it's very strong, very resistant labor market. And we can see here, consumer confidence is still growing, is still recovering here, and the consumer spending is still high, and the consumer credit is still growing. So, and the consumer price index, this is the data we are all waiting for. This will tell us the direction. So this will be a critical day when the consumer price index data comes out. So make sure to keep an eye on that. I'll for sure keep an eye on that. If you go over to the commodity, as you guys know, the OPEC Plus with the Russia-led allies decided to cut the output by 2 million barrels each day. And this after that Wednesday, we saw the Brent oil price increase above $90 per barrel, and now it's at $97. So this is putting a lot of pressures to the inflation. So guys, what's going on right now going forward? Well, with this data, I believe we'll continue to see the stock markets decline. And as I mentioned in my previous videos, I believe a lot of investors are either selling or getting on more a defense stand, or just holding cash in order to try to time the bottom. And I believe this will go on for quite some time. So we may not see a soft landing because of the data here. And a lot of investors, a lot of people believe that or want the Fed to pivot, but I think with the data we just recently saw, that gives them the ammo to go ahead, to go on and continue to increase the interest rate. We are expecting to see an increase of 75 basis points. And so that is what we are expecting. But at the same time, we are still awaiting CPI data. That will be very critical. So guys, that's all I have for this episode. I truly hope you have enjoyed this one. And if you have any questions or have stocks you want me to take a look at, let me know in the comment sections below. And I hope to catch you on the next one. And I hope you have a good one. Take care, guys. See you soon. Bye-bye.